Hi and welcome to the Market Alert for Friday the 11th of April 2025. Bonds breaking, gold flexing, VX TLT on fire, but yay, totally safe. Big risks under the surface. There certainly, especially with that 2 trillion support fund that they're looking at to underwrite the 2-year treasury. Here we go again. Basis trade, that's what it's referring to there, the changing basis of the the treasuries. Disintegrate, sending gold, euro, yen soaring, yields trip, Besant's red line, again referring to the 2-year rates as dollar plummets. And US stocks gave back some of Wednesday's historic gains as tariff uncertainty lingered. And gold, the everything hedge is everything again. Boss wants to know why you dumped gold. Yes, I'd like to know why you dumped gold, Mr. Brown, back in the 2000s, early 2000s, that is. Right, let's have a look at the market's reaction to yesterday's activity and kick off with the Dow. So yesterday, market reversed its 50% of its gains from the announcement of postponing the tariffs for 90 days, but overnight the market's managed to get back above the 5-bar moving average, and it needs to get back above the 40,000. It struggled there. So yesterday we see the market coming back below the 40,000 as soon as the cash market opened, but it found support at the 200 MA and then moved back to the upside. At the moment we're above the DP, so could quite easily move back towards the high of yesterday. If not, we head down to the low and the 200 MA once more. In the S&P 500, similar thing, down to the 5-bar moving average. Markets moved up overnight, and there you can see that prices have moved sharply lower, down to the 200 MA in the 30-minute chart as well, with prices starting to move back to the upside and trying to get through the DP there. In the FT 100, prices are sideways to higher again, showing that same trading pattern, having traded below the 5-bar moving average and then moved back up above it. 30-minute chart, down day for the FT 100, but bouncing back above the 200 MA on 3 occasions there, and then above the DP as well overnight, maybe trying to head towards the high. Depends what's going to happen today, because this trade war with China is only just begun. It's not over by a long shot, and neither of the other tariffs are as well. So let's have a look at the US dollar. But just before we do, let's just have a look at the CPI numbers for yesterday. I got to mention them in the start of the recording. You can see we were down, didn't even make the headlines yesterday, but I thought I'd just show you those. Economic news today, we've got a core GDP for the UK that's showing a slight increase. PPI month on month for the US at 130, and PPI month on month as well, and then UM consumer sentiment, and then UM inflation expectation. They're out at 3 p.m. US dollar, well, it says it all, doesn't it? This is a weekly chart, so this is when Trump was elected, and this is what's happened after he was elected. I think that says it all and sums it up quite succinctly, to be honest with you. The market obviously trading down to a recent low over here, back to that 100 level, isn't it? Let's just have a look at yesterday's numbers. It actually traded below 99.66. At the moment, we're actually still above the 100 level, but that's going to be an important level, needs to be watched, that does. Let's just have a look at the monthly chart of this and just see where we're at with regards to a longer term looks. Oh right, really important, very, very important. So it needs to stay above the 100, otherwise we're sailing down, aren't we, quite considerably. So keep an eye on the dollar for that 99 level to actually hold. Let's have a look at the metals and kick off with silver. And yesterday silver was allowed to move higher, but not a great deal. The price is really being suppressed at the moment. You can see the 200 MA blocking this at the moment on the upside. It has rallied back after last week's carnage, but it still needs to get above that 200 MA. In the 30-minute chart, it's a bit choppy. They still managed to get this slamming yesterday and then move the market back to the upside there. Needs to take out the high of yesterday, but at the moment under pressure, which is completely the opposite to gold, which is flying high at the moment. New all-time high of 3,220. My projection of 3,500 for December may even be achieved a lot sooner with what's going on at the moment. 30-minute chart, so you can see they're just slamming the price now with the paper market. Not a true reflection of what's happening in the real world, in the real metal. But moving up nicely there, so having a bit of a pullback. Needs to hold at yesterday's high, really. And it's not. It's you can see there it's just been slammed again to the downside. But that's indicative of a market making a new all-time high as well. So 3,220 and just moving down there a bit at the moment. So let's have a look at the gold-silver ratio. Well, this says it all, doesn't it? As far as silver is concerned, we're back up to 102 and it could go higher because they're certainly not allowing the price of silver to go up. It's an absolute bargain. 102 silver coins, 1 ounce coins for 1 ounce of gold. I've never seen it or expected it to stay here. I was expecting a quicker reversal. Yes, the COVID situation was slightly different, but the global economy isn't shut down at the moment. This is certainly a reflection of the trade war situation and these tariffs. So it could go a lot higher at the moment. It certainly go up to around 110 if it needed to. That doesn't mean to say the price of silver would drop significantly. It's purely and simply that gold is outpacing the silver market at the moment and they're not allowing it to catch up with gold. When it does, it will be massive, but until that point the price suppression of the silver market continues. So a quick look at yesterday. Unfortunately, I forgot to hit the record button, but we kicked off with the market moving higher. It then broke the 200 MA, came back and then found resistance with this. Market moving lower, back to the 20 bar moving average and all the way down to the DP. Back to the 20 bar moving average, just below the DP. Back to the 20 bar moving average and then back through that as well. So a big move down yesterday in the German DAX. If we just have a look at the morning session, you will see that we were down 468 points there for this market. So a big move to the downside. Just have a quick look what happened through the morning. You can see the market just trading there in a range of 150 points, I might add, up and down there. Then in the afternoon, following the US lower after initial burst to the upside, and then prices making their way back down. You can see the climatic volume there as the market tries to find support, and it finds it with 289% retracements there and there before moving up. And then from there to there is an 89% retracement as well before prices move down again in the early part of the evening, and they continue to drift down as again Trump opening his mouth is all that needed to move the market down once more, as you can see there, but recovering as it moved into the later part of the trading session or the electronic session up until 9 p.m. There you can see the market again, big spike in volume at 9 p.m. as they exited their trades for the day. So quick look at where we are, and the market trying to move up. We're above yesterday's close and the DP at the moment. Need to get towards the high, which you'll see in just a minute, which is obviously 400 or 500 points away, and the low the same. So it's again just a matter of the market using whatever news it gets today to make its mind up in which direction it intends to trade. But at the moment, close up on a micro basis, we've got the 20 bar moving average, 50, and we've got the close there as well. Where's the 200 MA then? Is it above or below? I should think it's below. There it is, yeah. So just below that, and price is just sideways there. Right, that will do it for this one and for this week, and have a great weekend, and see you in Monday's edition of the Market Alert. So as ever, thanks for watching. See you in the next one.